Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Hello and welcome. You're watching BTTV. I'm Tanya Aneja. Well, it's the earnings season and the company on our radar today is JB Pharma. Well, the company reported a set of numbers for the third quarter. Profit is up 26% to 134 odd crore rupees and the revenue is also up 7%. It was the strong improvement in operating performance that lifted the earnings. So to discuss the earning fine print, I'm joined by Mr. Nikhil Chopra, who is the CEO and full-time director at JB Pharma. Good afternoon, Mr. Chopra. First of all, congratulations for a stellar set of numbers. So why don't you first take us through the key highlights of the quarter gone by and of course the profitability as well. The profit is up around 26%. So what really worked this time around?
First of all, good afternoon, Tanya, and to all the viewers on BTTV. It has been a fair run for JB for 9 months, and specifically talking about the quarter, the revenues grew by 7% as you shared, and the profit grew by 26%. This was the best quarter where we could generate 67% plus gross margin. That is where we stood. That is why you could see a good jump in profitability. This was majorly backed up by what we are trying to do in India, trying to improve our chronic mix in the business, which has been helping us to treat more and more number of patients who are suffering from lifestyle diseases. Equally, when you look at profitability, the CDMO business is also, which we do outside India with some of the big market players in the world of lozenges. That contribution is also improving quarter by quarter, which is also helping us to maintain our EBITDA margins as well as profitability. Plus, there are a couple of more things. There is a robust efficiency program which we have been for last now 3 years, which is a continued effort, and it will continue for next 3 years also. Looking at improvement in productivity, improvement in batch sizes, better vendor management, all those things are a part and parcel of this entire efficiency program, which is helping us to generate better saving and reinvest in the business. That is what we are trying to do. And last but not the least is also every quarter we have taken a haircut of around 30 to 40 crores in our South Africa public market business, which is overall in long term is only helping us every quarter to improve our EBITDA margins, because that business was having very thin margins. So that is why you see gross margins 67% plus and profitability growing at 26%.
Absolutely. And I want to talk to you about the margins only, Mr. Chopra. The gross margins at 67%, operating margins at 27.8%. So how do you plan to sustain these kind of numbers going forward?
So a couple of things which we have been guiding in our all commentaries. If you look at India business today is contributing 53% to the revenue. We want this contribution to go up as high as 60%, which should happen in a couple of years. Which helps us in our India margins are better than overall EBITDA margins for the company. And second is CDMO, which was contributing 3 years ago 5% to the revenue. This year is contributing around 12% to the revenue. And the long-term plan, the CDMO business is $50 million business, and this business we want to take in next 3 to 5 years close to $100 million. Here also the margins are better. So this 12% of CDMO we want to take it to 20%, and 53% of India we want to take it to 60%. So 80% of business are two businesses where we are focusing, where we are putting all the efforts. This will not only help us to improve our gross margin, EBITDA margin, but also help us to reinvest in the business to improve new capability in terms of what we can do more for the consumers in CDMO business and what more we can do for the patients in India market. So rough guidance for margins are, it ranges between 25 to 27% for the next year also. Top line is 12 to 14% what we have been guiding, and EBITDA margin should go between 16 to 18%. That is what is the guidance which we also shared in our yesterday's conference call.
Absolutely. Got that, Mr. Chopra. And the company has also mentioned, in the press release about the recent ophthalmology foray, which has brought some of
Yeah.
the biggest brands. So if you could tell us more about your recent foray and, of course, the biggest brands that you have been talking about.
I'll be able to share limited information because it's a work in progress which has been happening. Last 15-20 days only we are into operations. We have in-licensed 10 brands from Novartis, that is in the world of ophthalmology, and that revenue is close to around 200 crores annually. Out of ophthalmology market, where we are present close to around 2,500-3,000 crore. Out of these 10 brands, 5 brands are number one in their category, more in the world of glaucoma, pain, anti-allergic, that is where we stand. And overall, first 3 months we are using in terms of how do we get to know better the ophthalmology market. And I think post Q4, in our Q4 results commentary, we'll be able to throw more color in terms of what we want to do with this entire portfolio. But we are excited because overall ophthalmology market is growing at around 14%, which is growing better overall than the Indian pharma market growth of 10%. Also, I would like to bring one more point to your attention, that Indian pharma market is growing at 10%, and we at JB are growing at 13%. But if you look at JB's covered market in Indian pharma market is growing at 12% as compared to 10% market growth. And within that JB's covered market, we are growing at 16%. So what I'm trying to indicate, the portfolio that we are into, be it in the world of cardiology, probiotics, pediatrics, now in ophthalmology, the portfolio that we have built over a period of time and the new launches that we have done, which also are contributing between 3 to 4% to the revenue, is a portfolio that we have built which will last for next 2-3 decades. That is what I wanted to talk about when you are talking about a progressive part of the portfolio.
Okay, absolutely got that. And let's talk about the CDMO business as well, Mr. Chopra, because that business witnessed muted performance in the third quarter of FY24. However, the order book for the forthcoming quarters looks healthy. That is what you mentioned in the press release. So if you could tell us more about that.
Yeah. So CDMO business run rate every quarter has been close to 100 crores. Quarter 3 was around 85 to 90 crores. That is what we saw, the revenue that we could generate. And this business last year has doubled. So when we started in 2020, the business was contributing 5%. Now today, the business is contributing 12% to the revenue. So on that business, we had planned around high single-digit growth for the current year. But as we look at this $50 million business, which is happening in the world of CDMO, particularly for lozenges, where we are the dominant player in world of manufacturing, we have the capacity to manufacture close to 2 billion units of lozenges, and we are the 5th largest manufacturer of lozenges globally. That is where we stand with the capacity that we have got. And last year we manufactured close to 1 billion lozenges, and this year also we should be crossing that landmark. And we manufacture some marquee big brands like Vicks, Vicks Acta, Vicks Immune, Strepsils, Deflam Plus, C-Cuff, Dr. Mom. These are some big names globally in Southeast Asia market, Australia, New Zealand, Canada, Russia, South Africa. These are the markets where we work with some big partners. Going ahead, 3 strategies that we have put in place, how to double this business in next 3 to 5 years. We are looking at adding new geographies like Brazil, Mexico, some parts of Europe, US, enhanced presence in South Africa on our own. Equally add new partners in these markets. And third, today our dominance in lozenges is more happening in the area of cough and cold. We have developed some new prototypes for lozenges for sleep disorders, for pain, for immunity, for oral thrush. All those you should start seeing happening probably in next financial year when they will be available in the market. So this is what is happening in the world of CDMO space, and we are much more excited with all these new developments happening.
Okay, and I want to talk to you about, lastly, Mr. Chopra, about South Africa, because in the press release you have mentioned that the international business revenue declined by 1% due to the South Africa business, and overall revenue was also impacted. So could you tell us more about this and what's the outlook going forward?
So South Africa, monthly we are doing around 20 crore business. This year, so annually we'll be doing 250 crore business. We have taken a haircut of around 150 crores. Okay. If we would have not taken the haircut, the business would have been 400 crores. That is how we have spread the overall haircut for 5 quarters, starting April 2023. That is where we stand. Now, this business was happening more with the tender participation. And that we are not participating because that business was not giving us any margins. And what has in that turn happened, there are a lot of opportunities which have come across in terms of getting into consumer space in South Africa market, getting into the launch of lozenges, what I was sharing with you earlier, launch of some dermaceutical products. And earlier in this business, the public contribution to the revenue was 60% and private was 40%. Now, this 250 crore revenue, the private contribution is now 60% and public is 40%. So overall, we have taken a haircut in terms of revenue, but our EBITDA margins are not impacted. And FY 24-25 onwards, Q1 onwards, the business is normalized. So there is no hit on in terms of margins. Revenues, we have taken a haircut, but we are looking at other opportunities which will come across over a period of time.
Okay, absolutely got that. And before we let you go, Mr. Chopra, your last comment on the new launches, because you have mentioned that new launches in acute and probiotic business have also seen strong performance. So
Yes.
if you could tell us more about these new launches.
So probiotic, the launch is going to happen. We are going to launch a liquid version of our Sporolac, which should see the daylight probably in the month of April or May at the season time. We have launched some of the products in the world of GI space, some products for reflux acid disorders, which we have launched in the form of liquid formulation, which is a good uptake. We are selling around 100,000 bottles a month in 6 months of the launch. We have got some exciting launches that we have done in the world of pediatric space, which is also seen a good traction, be it in the area of laxatives, be it in the area of probiotics, sachet formulations. So all this helping together is putting overall the new product contribution, which was never the strength of JB, which is contributing now 3 to 4% to the overall revenue.
Okay, absolutely got that. And on that wonderful note, thank you so much, Mr. Chopra, for taking the time out and for sharing these insights with us, and all the very best for the upcoming quarters as well.
Thank you.
So with that, ladies and gentlemen, it's time for us to wrap up this special edition, but lots more coming up for you only on BT TV. Stay tuned and many thanks for watching.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors. Darwin Platform Group of Companies is one of the fastest.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today. Celebrate 32 years of leadership in business news with Business Today. From the groundbreaking AI cover of Sundar Pichai to PM Modi's exclusive on G20, we redefine headlines. Now our 32nd anniversary issue explores India 2029, the 5-year agenda, with industry titans sharing exclusive insights. So, just BT it for unparalleled perspectives. Business Today, 32 years of leadership, innovation, and business brilliance. Subscribe now.